Greetings, everybody, and hope everybody has a great and safe and rewarding Memorial Day, wherever you may be. This is Jeff Scott, and this is my weekend review done on Monday because, hey, I had an extra day off, just like you. Entitled today, we've had a Memorial Day rally this week, and does it have legs, or is this just another bull trap? Disclaimer, as always, this is for education purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker, and I take advantage of my independence, and I use tools that I pay for, but I'm free to say what I want to say. No one's paying me to do this, and I therefore hope to have as little bias as possible about the tools. What I don't have biases about are the people that I have learned from. And I always like to keep a wall up on my presentation of some of the important influences, whether they're Woodward and Brown, O'Neill, Morales and Katcher, John Person, Minervini, Jesse Stein, and others, Steve Bigelow, Van Tharp, etc., and so on and so forth. Highly recommend anything I put on this board. Different strokes for different folks. Alexander Elder, I'll leave him out. I spent a couple weekends ago, spent the weekend with him and Carrie. Great meeting. But these are all things that I highly recommend. Bottom line is I am an individual investor. My goal is to grow my nest egg to the point where I, don't have to worry about anything. And more importantly, to where my grandkids and my grandkids' kids won't have to worry about anything either. And I'm responsible for my own money, as are you, even if you let somebody else manage it. And I find it useful to identify brilliant minds and learn from them. And these are some of the ones that I used, that I've learned from. I have a lot of programs, or I should say I've bought a lot of programs. I don't use a lot. I need a real-time platform. I need an analysis tool, of which I use HGSI and EdgeRater, seasonal analysis, Magenta Trader, and then MarketSmith for extended fundamental data. I always put this up here, and I ask the question, where are we? And this has been a year where it's looked like we're rolling over. Another leg up, looks like we're rolling over, another leg up, and so on and so forth. I think I said last week I thought we were about to take another leg up, and we are. So I guess we're still over here on this left shoulder, and every time we think we're going up, or that we're going down, we take another leg up. So until we stop this pattern, I remain somewhat bullish, more bullish this week than I was the last couple of weeks, but that can change in a heartbeat. Things that would be supportive of a bullish move. Back here we had a kahuna a couple days ago on the Canaries. The Canaries, which were pretty much left for dead, put in a nice bottoming pattern here, broke above the 200 and the 50-day moving average this past week, and there's blue sky above them, so I expect to see the Canaries to roll. Not a surprise to me because I took a fairly big position recently in Netflix, Facebook, Google, CMG, and they've all rallied nicely off intermediate bottoms. And then I have my current LLUR list, which is a list we put together in March that never really broke. It's gone sideways now, going back since March, when it had its high at the end of March, early April. And it looks to me like it's getting ready to go again. It held above its moving averages. It looks like it wants to go higher as well. Yes, I can be concerned about the low volume last week on this rally, but it was Memorial Day, and therefore I'm giving it less credence. I put this up here because I do think there's some clear rotation going on in the market. And what I did is I ran the group performance analysis in HGSI 3 times, and I looked at the major market averages or indexes, and I looked at 1 week, month to date, and year to date. So if we look at year to date, I was a little bit surprised, but I guess it's Microsoft and Intel driving it. I don't understand, or Intel at least. The semiconductors are leading for the year. Strange, I thought. Not so strange because gold and silver and the oils have done well. It was that the Amex was doing well in second place. And then also not surprising based upon the last several weeks, utilities have looked relatively strong as well. Now, if you look at month to date, it's a little bit different. The NASDAQ 100, interestingly, over the last 26 days, is up 2.66. The semis up 2.42. But the transports really starting to pick up. Now, the transports, frankly, have been strong all year, probably the most consistent going across these numbers, and one of the most consistent. Over the last week, the little guy, or the NASDAQ woke up. And the NASDAQ was up in third place, semis in second place, in the NASDAQ 100. It's interesting when you think about the wreck in the NASDAQ 100, I think it really was a separation between the bigs and the littles, between growth and value, in that it wasn't just a size-based thing. In fact, if you look at the Russell 2000, last week we looked at the growth versus the value part, and growth was the part that was being hurt. But even the Russell 2000 last week perked up, and the small caps perked up. So clearly the big guys, the S&P 500, which had been a leader, but not really when you compare it to the SOX, which is still hard for me to believe, was up less than 1%, excuse me, a little bit over 1% on the S&P. Utilities rotating out of it perhaps as more risk is on. So I guess I look at this and say risk on, and see for how long. Market themes, rally week, more to come, or 1 week wonder. I guess we'll know next week. Oh, just an aside, starting on Friday is ASCO, the annual American Society of Clinical Oncology meeting. Lots of market-moving news on biotechs. We'll be there. I'll be there as well, and I'm not sure I'm going to do this program next week. So if you don't see it, don't worry about it. You're going to miss anything. Fallen angels and canaries are on the march. As I mentioned, I took some positions in these stocks: Netflix, Google, CMG, Apple, Priceline. Within the last 10 days, they started to move. Banks are weak. However, take a look at Amex, Visa, and MasterCard, even Discovery. They're moving. Interest rates at low of channel, dividend play still plenty, but watch the 10-year note. It seems like when the 10-year note goes up, those interest rate paying entities go down, no shocker. The channel looks between 2.5, 2.45, and 3. And we're at the low end of the channel. In fact, I think we've already bounced off the low end. So that might put some of the dividend players at some risk this week. And then home builders are bouncing, but I'm a little nervous there because I looked at seasonality of the end of the HB, I guess it is, and I also looked at seasonality of Toll Brothers, Pulte, Lennar, and they're all 8-2 against, which means over the last 10 years, over the next 2 weeks, they've all gone down. So 8 out of 10 times. So I'd be a little careful in the home builders. My meeting in June is sold out. At this point, if I haven't already responded okay to you, then the answer is I have a wait list in case people drop out. As of June 1st, the way that I give refunds is if somebody comes up and takes your place. So if you want to give me your name for a wait list, I know in the New York meeting I did have a couple of 2 late opportunities. Week ahead, short week. Not as I look at this, what pops out at me? Maybe some home builder moving with the Schiller Index. Consumer confidence is always a big deal. Initial claims and continuing claims on the 29th. Some of the GDP, if you look at that deflator, that would be interesting to see. Pending home sales, so that might be important for the home builders. Natural gas has been a mover because you've had some drawdowns. And, when you think about how bad this winter has been, there's a lot of people that think natural gas, because our inventories are low, natural gas is going to spike. I'm playing that with some UNG, but to be honest, it hasn't performed. And Michigan sentiment there. On the earnings side, you need to know where your earnings are. If you don't know how to do that in HGSI, if I remember, I'll show you today. I use an indicator also in TradeStation for that, which is free. You've got Jinko Solar. You've got Quihu, you've got AutoZone on Tuesday. On Wednesday, the ones that jumped out at me as being a big deal: Michael Kors, Toll Brothers. On Thursday, Abercrombie & Fitch, Costco, Fred's, Starbucks Shippers, YGE Solar, NQ, SPLK, some small tech, Lionsgate, Infoblocks, Avgo, and then AND's big on Friday. So a number of stocks I've mentioned from time to time will have earnings this week, so something you need to know about. So I've now gone through my PowerPoint. The next thing that I like to do, let me save it so I don't lose it, is take a look at my elder indicators and see if I'm seeing anything that makes me excited or nervous going towards the week. So this is, whoops, come in. Try that again. This is TradeStation for those that don't recognize it. I mentioned the earnings screen or the earnings date. So this is a free indicator on TradeStation. It's called MP Earnings. You have to download it from the forum. But what's nice about it, I'm not going to say it's perfectly accurate. It uses earnings.com, so it doesn't require a username or password, which is a big improvement than when I use briefing.com. But it gives you, here's the tickers, and here are the earnings dates, and whether it's before or after the close, or I can't remember what the green is. I got to reformat that one, don't I? And how many days. It's a great opportunity to know about when things are coming out on your stocks. All right, so on the elder indicators, I'm really looking at the color of the bars and trying to get an idea if it's buying season, selling season, or dealer's choice. Let's start with the NASDAQ. You know, we've really gotten a lot stronger, as I showed you. The NASDAQ and the NASDAQ 100 did very well this week. And no surprise, the NASDAQ is green on the daily and on the weekly, blue on the monthly. No obvious ongoing divergences. 53% on the high jump bar. Except for low volumes this week, I'd say the NASDAQ looks good. The NASDAQ, the buying window is open. That means I can buy or I hold, but there's no reason to be shorting at this point. That can change during an intraday. On the Dow, similar pattern, middle of its envelopes, green, green, and blue. These red dots here are evidence of divergence, and we don't have any evidence of divergence right now. That said, kind of interesting that we're moving up and we haven't had a break of the zero line on the MACD histogram. But I'm going to look at what I can see. I've got a divergence on the weekly chart on the MACD. But for the most part, what do I have here? I have green, green, and blue. And the Dow says I could be going long if that's what I want to do. I want to look at the Russell. Broken record time, green, green, and blue. Buying window is open on the Russell. Look at the semiconductors. You know, you wonder why the semiconductors numbers are so strong. Look at this run that they've been in. It's sideways the last couple of months. But since the beginning of 14, they've had a rip-roaring run on the semis. Green, green, and blue. No obvious divergences. And then last, let's look at the S&P, the ES. So we do see some divergences here, which a divergence should make you be concerned that you could be topping, but a divergence doesn't signal an immediate change. Here it took several days. There are plenty of times when I see divergences, if you go back here in this weekly chart, where I saw divergences the whole way up before the market rolled over. So I see green, green, and blue. Buying window is open. So all in all, I'm pretty excited that we may have some run left in this. That said, great, you can see my lousy account here. Yeah, this is a kamikaze account. It's making money, although I've had a couple of ones that I should have sold, like my Jinko Solar. But this market here is you know, you're free to buy this market is what I was trying to say. All right. Now, the other thing I like to do is I like to look at some of my EdgeRater and also some of my HGSI screens and scans I can do. So first thing I like to do to get a sense of what was like last week and what was working was to look at the group performance analysis. Group performance analysis, also known as a GPA, allows you to pick a group or series of groups, set the time frame. So I look from close of the market on last week to close of the market this week, and look to see performance. The reason why I do this is I want to see how my type of stocks, not just the stocks that I own, but the kind of stocks that I look at, growth stocks, are doing compared to the S&P. And then look to see how the ones that I pick and the ones that I hold are comparing as well. So this is a list of the lists, and the first thing you can see is there's only 2 red ones. And interesting what 2 things are here. Red candle highs, these are single-day reversals, meaning they traded to a recent new high, I think a 20-day new high, but closed down for the day. And you can see those stocks in a very strong week. These were done last weekend. We're down over 3.5%. My pentaplays, or all my positive indicators, Kuna Forest, mobile breakouts, pocket pivots, Bible gap ups, they actually were down a little bit for the week. That's not that surprising. Sometimes it's a little bit of exuberance, and they go sideways for a while after the big move they had to get into this list. The S&P 500 was up for the week on this measurement, 1.21%. Pretty strong week. Good news was, well, here's the stocks that I picked last week as buys. We're up nearly twice that, which is nice to see. 70% were up. HGS 100 was up 2.8. IBD 50 was up 2.84. The GAF All-Stars, which I'll show you again how to make, I picked 24 last week, of which they were up 3.4%. That's 3 times almost the performance of the S&P 500. And what a beautiful return, 22-2 winners versus losers. High beta stocks, which small group of stocks that I like to follow, which they closely correlate on good or bad with the things that I like to buy. And they were up 5.3%. And you know, sometimes even a blind squirrel gets lucky. And I did this thing during the week. I was up a lot of money on that date. My wife got mad because I mentioned the number, but you know, I mean, you wouldn't be following me if you thought I was a lousy investor. And you know, one thing I like to do is I like to follow people who make more money trading than they do selling stuff. And if you think I'm making a living selling my little indicators, you got another thing coming. I was up 5.5% last week, and 40-14 winners versus losers. So it was a great week. All comers. I had a happy time. No Hindenburgs very quickly, which is good. Remember, Hindenburgs occur at times of potential tops and before major declines. 1 out of 4 is meaningful. 3 out of 4 are false signals. You look for a series of them and recognize that all major market falls in the last 50 years have followed a series of Hindenburgs. Bucketology, I got a couple things to show you today. We'll start with the buckets, and I think this has been a fairly significant move. And let me go show you how the buckets come, how we make the buckets. I go into my Edge Rater and I look for the HGSI templates. And then I look for bucketology, percent buckets. I do them on different things, but typically we do them on the S&P 1500. I hit run. And it tells me that if I take the 1,500 stocks in the S&P 1500 and assign them into 10% slices of the 0 to 100 range of the Bollinger Bands, and then add a slice below and a slice above for a total of 12 slices, I get a feel of several things. I see that 64% is above the midline. That tends towards a bullish move. And I can see that very few are below the lower band. On the other hand, I look to see how many are above the upper band, and I don't see too much here. And the preponderance are at the, I guess, the middle of the upper, between halfway and full. Now, one thing I've learned over the years is that when the number down here, in the less than 0 and the first slice get to be very big, it's a good indicator of a bottom within 3 days. I've not been as convinced that high numbers are anything that tell me of a reversal. Probably a slowdown and a sideways. If I go backwards one day, see how we had a big switch as We had a strong day Friday, things moved over. Before that, even more to the left. And I keep going. You can see now back on the 20th. So I looked at a progression over the last several days where we flip-flopped these numbers and seen a march to the right of where the stocks are within their buckets. So obviously a lot of strength has come into this market. Now I've looked at a couple of other buckets. And actually let me show them because they perhaps even more dramatic changes. I can do a buckets of my high beta stocks. And it's not going to be as pretty because I don't have as many stocks. But take a look, 50-50 here, very little below end. Go back 1 day, 2 days, 3 days, 4 days, 5 days. Now we're getting back a week ago, and you can start to see the differences in the market. We're very robust to the downside. And there were a couple of days when we just were very, now I'm going back to the 8th. So this is when the bulls were feeling pain. And when it looked like we were, this is when I started to think that we'd start to see the market turn around. It took a little longer, but why I started getting into my NASDAQ 100 stocks. In fact, I could look at the NASDAQ 100 and do a buckets as well. And you could see the strength in the NASDAQ 100, not 60s, it's 84% above the midline, almost 20% or 17% above the upper band, very little below the mid band. Now I got to just go back a few days, and you can see how this is a dramatic improvement in the NASDAQ 100. So my kinds of stocks, which are the NASDAQ 100 and high beta stocks, are moving. Bucket, the market analysis, what we do here is we've got 4 columns, and we have percent B change on the major indices, and we're looking for kahunas to the downside in red, to the upside in blue. You notice the last 3 days we've had a number of upside kahunas. We then have over here percent B. If you tell me what the percent B is, I know within the Bollinger Bands, anything above 0.7 is bullish, below 0.3 is bearish, in between those two is neutral. So if you tell me you're at 0.9, you're right below the upper band. You can see we've started to get some green across. This is the bandwidth, which doesn't mean much by itself. When you take percent B times bandwidth, you get the Woody indicator. Green is buying, is open. Red, selling. Yellow is chop. And you can see that we've been in a really long period of chop here. And I thought we were turning around back here. We went the other way. Starting to get some green. My guess is we're deserving a rally. If for no other reason, the duration of this chop here is much longer than any we've seen in the last couple of years. Another thing that you can do with Edge Rater, I'm not going to spend much time, but a lot of the things that I do, Chris White of Edge Rater called them the George Lee signals, a lot more David Elliott based things, looking at squeezes, which is John Carter, and then breakouts in a squeeze, whether it's from a PSAR reversal, mobile breakouts, pocket pivots from Morales and Kacher, and those are all automated, as well as for those of you that are fans of Gil Morales and Chris Kacher, also automated. You know what? I'll just run it live. Go back into Edge Rater. I need a lot of folks that really like pocket pivots and viable gap ups. So code blue would be, let's just run on the NASDAQ 100. And within the NASDAQ 100, these are a number of stocks, Garmin, Discovery, and Amazon, that I would go look at because they had kahunas, pocket pivots, and they met a lot of the characteristics of what Gil and Chris like to look at. I could run them against everything $2 and 150,000, the idea of how long it takes to run. I do have a relatively fast computer, but it's, I don't think it's much to do with my computer. It's just a really fast program. So it's going through about 3,500 stocks, and I'd expect those to come to the top. That would be things that meet a lot of the Morales and Kacher characteristics. Here's Lennar, a housing stock. And like I said, I'm a little bit nervous of housing only because of the seasonality. All right, let's get into HGSI. Go into the warehouse view, and since I changed my resolution, I'm going to have to resize everything, I'm afraid. Not that it's a big deal. All right. So let's go into the Woodward and Brown user groups. Major Markets Plus, top down, which is my all price and volume driven, heavier weighted to the last day and last week, but does look at up to 3 weeks, and let's look at where the strength of the market was. Small stocks, here's your small caps, and your Russell up at the top. Transports continue strong, the NASDAQ, weak volatility, gold, silver, and the big stocks at 100 and 500 were laggards this week. 5-day performance, you can see oil was up 2.6, NASDAQ 100 was up 2.5, semis 2.4, NASDAQ 2.3, Russell 2.1, all above 2%. Big loser for the week were Treasury bonds and volatility. Look at 1-day performance, the Russell and the small cap 600 and the semis were the leaders. Let's take a look at some of my favorites. The S&P 500. While I resize. Not what I want to resize. All right, let me kill my emails. Everybody and their mother is giving away a special one-time holiday deal offer this week. All right, so this is all my markings from last week. And last week I talked about how we were in a trading range and that sort of like in the Darvis box, we were bouncing. We were bouncing at the top, and I thought it was interesting that we had the moving averages coming in right underneath. So we're sort of in an ascending triangle. And guess what happened? We broke out and failed here. We broke out again on the S&P 500 on a daily chart. Now, I think I drew these boxes on the weekly, and you can see on the weekly we've broken above resistance. So we're kind of at the bar where we were the prior week, but is this a breakout going to lead to new highs? It could be, and I'm sort of licking my chops here that we might have a little bit of a rally. Do markets end at all-time highs? Well, sure, eventually it's going to end at an all-time high. But I'm looking for a blow-off before we get to that end. And, you know, I'm looking for this in reverse. Okay? See if I can find one on this. I'm looking for a parabolic run, kind of like here, where you had a big run straight up before you fell over. And I don't see a parabolic run yet, so maybe we've got one coming. Let's go into my favorite charts, and let's just take a look at what we got here. We had a mobile breakup from the squeeze and a PSAR reversal on the S&P 500 this week. There's no volume, so you won't get any forces or pocket pivots. Let's take a look at the NASDAQ. NASDAQ, I do have volume breaking above the 50, kind of looks like the canaries and the LOUR list. Also had a mobile breakout from the squeeze. This is not where I expect to see the market roll over. I expect to see us challenge those highs and either fail those highs and roll over or potentially break out to new highs, go parabolic. And that will be the end of this. But right now, I'm leaning towards the bullish. If I look at the Russell, you know, is this not a place that this was a stock that I wouldn't be talking about buying? Uptrend, pull back to the 200 moving average of Kahuna, mobile breakup from the squeeze. Looks more like a short-term bottom than a market that looks like it's going to die. Take a look at the Dow. Again, it looks, you know, it's sort of in a trading range like the S&P. Everything is green here. It too had a kahuna earlier in the week. I'm looking for the Dow to break out to new highs. Take a look at the VIX. VIX is getting down to that point. Let's go to a weekly. I mean, if I want to be bearish, this is about the lowest the VIX has been in 2 years. This is kind of a place where you expect the VIX to start to move up, and a rising VIX will be troublesome for the market. The VIX has been kind of predictable. It gets down here, but it can stay here for a couple of days, and then it runs up very quickly and gets hammered down. Runs up, hammered down, runs up, hammered down. It's kind of like the whack-a-moles. So that's the VIX. That would be a little bit bothersome. Silver and gold can't get in front of themselves. Gold looks to me like it's continuing to set up for potentially a move higher, but it hasn't moved yet. Silver looks a lot weaker as it's much further below its major moving averages. Same sideways consolidation, but at a much lower place. So I think that covers this. Let's just go into one drop down, which is broad market indices. The reason why I like that is you can look at the S&P 500 here, and you can see the S&P 500 actually has volume. But what I want to do is go into the S&P 1500, and let's look at the eye charts. These are charts from Ian and Ron. I got to clean this up one day, Jeffrey. These give me some information about the internals of the market. So S&P 1500 daily chart. So I still got red on the Bongo Weekly. The forces and the Bongo Dailies are green. The DI plus is about to cross the DI negative. We recognize that the volume was low last week. That may have been partially related to the fact that it was a holiday week. The blues above the red, which means the highs, the lows is above its 13-day exponential moving average. That's good. We're green here, which tells me that our new highs are more than the new lows. The dark green is when we get even more exuberant. We're not there, so that's okay. I go down one. I look at A through E accumulation distribution. You can see that over the last months, we've had a number of 3-to-1 bars, distribution greater than accumulation in the market. What we see here is the A's are down on the bottom. The B's have turned up. It'll be interesting to see. The leaders have been, interestingly, in yellow, the C's. So here you can see the A's are below the E's. We'd like to see these start to turn around and come up. But it does make me happy because it's from times when the E's are higher than the A's, where we start to make reversals from. Here's E versus A, and you can see that the percent of A and B's are about to break out above their 10-day exponential moving average. And when it's above that moving average, the market goes up. And when it's below that moving average, the market goes down. So breaking above is a strong thing. Let's look at 5-to-1 days. There's been 5-to-1 days against. Last week, it looks like that would have been Tuesday. Continuing up its reputation of being market mover days, 5-to-1 down. We still finished up despite that. And then another thing I like to look at is the indexes versus their moving average. So this is looking at, in blue, the percentage of stocks in the S&P 1500 that are above the 20-day moving average. So obviously when it gets to be very high, you start to get to high jump issues and the market pulls back. It then shows the moving average of that, and I like them to be breaking above as a sign of a market rally. So here's the 20, the 30 are above, the 50 looks like it wants to break above, the 200 has a ways to go. So what does this tell me? It tells me that I think it's a good setup for a rally. We're certainly not extended to the upside. We are a little bit extended to the downside, coming back up, and this is supportive of rally time for me. All right, now let's go into my industry analysis. Go down to 5. Let's go into, I want to look at this view. And so we've got 196. I think I blew it the other day, and I called these the Morningstar. These are Bloomberg indices. And as was pointed out to me, you'll be able to actually look within Bloomberg for further information. So there's a Bloomberg, not Morningstar. And, I think that there's a lot to be said about top-down investing, which is why I do it. And this is a much better group structure than we had. And it breaks certain things that didn't make sense to me, like solars and semis, into separate groups. So up at the top are semiconductor wafers. Make sure I'm let's rate by raw combo here. There we go. Pharmacies and drugstores, so Rite Aid. So this is top-down. Again, top-down is a balance of price and volume, and it's looking at mostly yesterday, some of the last week, and some of the last 3 weeks. From a group structure perspective, I want to look at what's moving now. So I look at the force up, of which I've got 94, and the force down, of which I probably have 2, to give me an idea of where the strength and the weakness is. So let's look at some of these groups up at the top. Internet media. I right-click, change to index group. I mentioned I took a position in Google, Facebook. There are a couple of them in this list. So let's go into my favorite chart view. So I'll do this once. We know there's no Hindenburg, so I could cover that up. All right. I have a weekly bongo and a daily bongo. I have a short 3-day bongo, which I hide, and I only look at if I want to see something special. I have accumulation and distribution here. Green is good, red is distribution. I got 13-day force and the 2-day force. In a uptrend, I would expect the bongo weekly to stay green. In a downtrend, it goes red. The 2-day bongo and the 2-day force are much quicker acting, and they turn the opposite color to the longer bar during retracements and pullbacks. This is my high jump bar, source of another lecture. Suffice it to say, when the stocks get extended, the high bar is the highest it's been, and that signifies a likely reversal. Red candle highs and green candle lows. This is my DMI channel. I don't use it too much. I'm going to close it up right now. This is for Bible gap ups, for Morales and Catcher fans. These are squeeze. These are mobile breakouts. I use candlesticks. This line here and this line here, the Bollinger Band. You can see during squeezes, the Bollinger Bands come close together. This dark line is the group index, which here seems to be turning up from a downtrend. Candlesticks are obvious. The magenta is an 8-day exponential. The green is a 17-day simple. The blue is a 50-day simple. The red is a 200-day simple moving average. This is my pocket pivot window. 5 days are the light blue and the light red. 10 days are the dark blue and the dark red. As I joked, I think on Thursday, you can't get a 10 without a 5 first within it. This is, so when you see a 10, you won't see a 5-day because the 10-day overrides it. These are Eurekas and Phoenixes. Eurekas are in green. Phoenixes are in red. These are sort of our exuberance days, which makes us start to think that we may have a turnaround. They could be follow-through days, etc. And then down here are kahunas. So Facebook, I could go to a clean chart up here, and I could see I'm excited. It looks just like the Canaries. It's broken above the 50. So my bet was we put in a bottom here, and I put in I did a crazy move on Facebook. I'd sold out on the way up here, and I want to be back in big. So I bought shares, but I also bought calls and sold puts back here, which is sort of risky, but I wanted back in. and I didn't want to miss the opportunity of buying shares at the $57 range. So if I remember correctly, I bought and sold like 100 calls and sold 100 puts to pay for the calls in the 57.5 strike. And those puts pretty much expired, and I rolled the calls forward into the next month. It's a risky move, but I felt pretty good that this was a bottom. We'll see if it holds. Not recommending you do that, but if you look at the stock curve, equity curve, it can go up, it can go down. If I buy puts and sell calls, if I buy calls and sell puts, I have the exact same curve as an equity curve, but the leverage could kill you if you end up having to buy those puts back. So that's Facebook. Here's Google. You know, I think someday we're going to look back and say, great buying opportunity. A couple kahunas at the end of the week, or couple pocket pivots at the end of the week, breaking above the 50. Mostly green up here. You notice that my 3-day bongo went green as well. That's usually a nice bellwether that the weekly is going to change as well this week. Breaking out, I think this runs up to 600. That's why I bought some 520, 600 spreads, or 580 spreads. Another one I bought this week was YY. Again, thinking that we put in a bottom here. I had a buy stop above the 200-day moving average. I'm not as comfortable that this is a good long-term play as the others, but I think it runs back at least up to the 50. Cena, this one's been clobbered. Bullish engulfing pattern, a kahuna, big volume. This gray bar you hardly ever see on a stock is a bingo. You see that when a stock has been trashed. Might be an interesting early time to start nibbling. My guess is you'll make money. Look at the earnings per share growth coming into the stock. If you nibble here, a little bit too risky for me. I think bottom line is this is a very interesting group. This is a stock that I really want to get back into, Quihu, but it has earnings this week. So I might be a little nervous, but it certainly looks to me like it's put in a bottom. With the strength in the NASDAQ and the NASDAQ 100, this is a place, a group of stocks that I want to be in. So what I do here is right-click. Whoops, I moved myself. Once I did what I did earlier, let's go back to Group 5. Semiconductor devices. We've talked about the strength of these throughout the year. I actually own 2 of the top 4. Avgo I don't own. This is one I wish I owned. It's had a nice lower left, upper right. It had a mobile breakout on Friday. Everything is green except the yellow on distribution. It had some volume on Friday. We want to look at it on a clean chart. We can look at it here, breaking out to new highs. It's got earnings coming in this week, so be careful. Beautiful looking chart. This is one of the 2 that I own, RF Micro. Bible gap up here. It hasn't looked back. Everything is green. Look, big power move here. Much of this came on the announced acquisition of TriPoint Semiconductor. Micron Technology. I own this one. Lower left, upper right. Got ugly back here in April. On the verge of a PSAR reversal out of the squeeze. All this is green. If I didn't own this, what I'd be doing is I'd be saying to myself, Jeff, if it breaks above this PSAR, it's going to run out of the squeeze. PSAR reversal out of the squeeze in an uptrending stock is an exciting time to buy. But I won't buy it unless it breaks above that PSAR dot, so I might be watching that with the daily chart intraday on TradeStation or Thinkorswim and putting my buy stop above that point. This has been obviously a leader, great earnings per share growth. Beware it slows down in the next year or 2. Marvell Technology, interesting buy point. It's right below the PSAR reversal. Had a mobile breakout from the squeeze on Thursday, mostly green above. Pocket pivots, huge volume in the kahuna. I want to know more about this one as well. So Semiconductors, super strong. Others that I like here, NXP, also look to me like it might be at a decent place to start nibbling. Sideways consolidation, had a mobile breakout from the squeeze. Everything flipped green in a kahuna on Friday. I believe this is one of the stocks that has earnings coming this week. In fact, let me show you something quick. So this is my semiconductor group. This is the view. I'm going to edit my view. And what I want to do is I want to put up EPS date. So I'm going to find EPS date somewhere in here. I don't think it's earnings due. Is it earnings due? Let's see. All right, so it's the earnings due. Okay, good. So I'm going to go back up to the front. And what I want to do is I want to make sure I'm not going to burn you with my recommendations. Not that this is for purposes of purchasing. I'm just talking. I'm going to take that earnings due date. I want to move it all the way up. I'm going to put it right below after symbol. So now, NXPI, so maybe it isn't due earnings this week. Okay, I guess I might be wrong there about the earnings. NXPI also looked, as I said, interesting sideways. Kahuna, mobile breakup from the squeeze, everything is green, like that one. So this is a very impressive group, which is the semiconductor devices. Biotech. These were beaten up. They're on fire now. On a lot of the little guys, and just because the stock price isn't little doesn't mean they're not little. They're news-driven. So let's just take a look at some of these. All right. There would be absolutely no reason why I would have been holding the stock here unless I'm a long-term owner and I know a story. Well, PT Therapeutics, huge news, big gap up, mobile breakout, Kahuna, tons of volume. But you know what? It traded down and closed at the low point of the day. So I'm not real enthused about that stock. ISIS, a lot more enthused about this one. In fact, I don't know if I mentioned this on Wednesday or Thursday's broadcast or not. This is one that was a beaten down. Why was I interested? Because higher low. PSAR reversal. It had gapped up on news Friday. Mobile breakout, starting to turn green up above. Pocket pivot on Thursday. Big kahuna on Friday. This one's a lot more interesting, but that was on news. Don't know anything about this guy. Cheap stock. Something happened. News. Sarepta. I also own this one. This one you had more of a reason to get into. You had a Bible gap up, mobile breakup from the squeeze, and a kahuna. It's gone sideways since. I'm giving it the red line, so I'm giving it a lot of rope. Now, what about normal, large biotechs? Alexion, pull back to the 50. In an uptrend now, mostly green, mobile breaker from squeeze Thursday. Is it time to get back in? It's your own call, but they're starting to look good. Intermune, this one's in a run. It's got a drug about to get approved by the FDA for pulmonary fibrosis. A little late. Biogen IDEC, great company. One of the leaders on the orphan drugs. And orphan drugs are great for a drug company because you can charge whatever you want. Breaks above the 50, that's a very bullish sign from my perspective. Celgene, I think this is going to be a winner long term, but right now it's got to break above the 200. So I have a long position, and I also have some puts in below it because I'm a little nervous about Celgene. I have a big position for one of my long-term holdings, and I've been playing around with some of my puts since the top. It's got to break above the 200 before I get back into it. Intercept, This is the one that I said to be careful of, that it would be a lot like Entremed, and it's still in the penalty box as far as I'm concerned. I'd be very careful with this high flyer, expensive stock. On news, it ran up here. And I guess you could say it's held its pattern, but it got up to 500 and it's down to 228. I find that one a little bit scary. Yeah. Nothing there. All right, next group is pharmacies and drugstores. So how do you say Rite Aid? I think these are big winners of Obamacare because they'll have increased volume related to people having insurance. We've talked about Rite Aid on this since it was in the $4. Nice lower left up to right. Another big move on Friday. Mobile breakout. Kahuna, tons of volume. What's not to love? Walgreens is a little bit more confusing to me. Not as pretty of a chart, but also looks like it's had its pullback, wants to run. Everything is green. Had a mobile breakout from the squeeze on Thursday. Kind of a shooting star on Friday. I'd want to see it get above the PSAR before I got excited. Rite Aid, I think, is my favorite there. It's been my favorite on these calls for a long time. Interesting that banks got up here. Now, this is the winning bank in my mind as Wells Fargo. Sorry about that. Nice run since October. PSA reversal on Thursday. Everything is green after mobile breakup from the squeeze on Wednesday with the Kahuna. Contrast that with Bank of America, where Bank of America is now in the penalty box. That said, perhaps it's set in a low and it's going to get back up above the 50. I'm much more confident in Wells Fargo. Verizon. Well, this is one of the things that we have to deal with the new group structures. Apple's communication equipment. I don't know what it should be. We'll look at a couple of these. Apple, does Apple go from here to 700? I think so. I think that we've now got a little bit of a cup and a handle, I guess. Breakout, my target, 700. Everything is green. It's as pretty as anything we've looked at. This is a weekly chart. Here's the daily chart on Apple. Looks like it wants to go higher. Cisco, sideways, good earnings. Bible gap up, still could be held. You bought on that Bible gap up. Nokia, I don't get them. I know it's about some of Microsoft buying their hardware. Ruckus Wireless in the penalty box, not interested. All right. And this is what top-down investing is. It's going through infrastructure. Let's look at the first couple. Going through the top index, so usually go through the top 10. Really beaten up stock. FireEye has put in a bottom. Well, look, you got a lot of volume coming into the stock that hasn't been there in a long time. Mostly green up here, except for the daily, weekly bondo. Your moving averages have a down slope, which I don't like. I am intrigued by this volume. This PSAR reversal had a pocket pivot about a week ago. That might be one to nibble on. Oracle. Much more attractive chart. Lower left, upper right gets a little loose in here. Mobile breakup from the squeeze on Friday. Everything is green. That looks pretty good to me. ServiceNow, wants to come back, putting a little bit of a scoop bottom. Had a pocket pivot on Friday. It looks interesting as well. Splunk has earnings coming out this week, so I'd be nervous. Specialty Pharma. This is one of the outcomes of the new Morningstar groups, Bloomberg groups, as they've taken some of the things that were in big pharma but acted more like biotech, and they put them in the specialty pharma. Allergan continues to be subject to a Valiant takeover. It's starting to get a little bit ugly here, but Allergan, do you buy this and hope that it goes higher if a takeout comes? Or are you concerned that a takeout doesn't come and it drops? Their management wants you to believe it's going higher on its own. Certainly looks like a pretty strong chart right now. Interestingly, here's the Valiant. I think Valiant's a more attractive buy right now. Yes, it's in a downtrend, but short term it's in an uptrend. It broke above the 50 with a PSAR reversal on Friday after a mobile breakout signal on Thursday, mostly green above. I think that Valiant wants to go higher. I'm long Valiant here. Jazz, Jazz has got to get above the 50 because right now, failure at the 50, failure at the 50, failure to the 50. And what happens when it fails? It takes out the lower moving average. I'd like to see it break out above there before I get interested. I've seen earnings projections and price targets coming down. That makes me nervous. Endo, I don't get this company. They sold off a lot of assets. Never understood why they were as highly marked up as they were. I think they had a reverse merger with a Canadian company that cuts their taxation. But this was a great buying point at 60. It's now at 76. I'm a little bit less interested. Forest Laboratory, this is a takeout candidate. There's another one that reminds me a lot of the younger Jazz. That, they did a recent acquisition. And look at Salix going sideways here. Look at the earnings starting to come into this stock. This is one that I'd be looking at if I was a Jazz long-term, or I might want to switch and become a Salix long-term. All right, I'm starting to get tired, so we must be getting near the bottom of my list of top 10s. That was 8. Number 9, application software. We'll look at the first couple. Below the 200, Salesforce, I pass. Demandware, don't know anything about it, don't like its earnings per share growth. I do like the fact that it's put in the bottom here, broke above the moving averages, had a mobile breakout from a squeeze not too long ago, mostly green above. I might want to look at this one with my stop below the 200-day moving average. Table looks a lot like Demandware, but hasn't had a chance to break out above here. And this looks like a bottom, so I'm not against nibbling here, perhaps with this minor position size. It's had a PSAR reversal out of the squeeze. Workaday, and these were the stocks that I couldn't wait to short because they were running up all-time highs without earnings. And they were great shorting candidates. Not great shorting candidates here, probably putting in opportunities to buy them at a discount. And then the last group looks like the carriers, which is Verizon, which I'm interested in Verizon on a number of reasons. It doesn't look like a great story there. It looks kind of sideways. If I look at it on a weekly, run up, sideways. But a sideways performer heading up maybe, and a dividend of 4.3% might be something that I find attractive. To the downside. Now it's interesting, the downside, let me go back to the groups. Powerful market, there's not much to the downside. I was surprised to see exploration and production here. There were some big losers here. Matador was down 5.8%. If you look at 5-day, almost all of them are up. So this is probably a short-term phenomenon. Let's just look at a couple of the worst ones. Look at the first 3. Yeah, I mean, failure at the 50. May come down to the 200, but it's only $2 away. Concho, sideways. Kahuna to the downside. Taka pivot to the downside. It's been a leader. S&M, failure at the 200. All right, so I can see why these were a bad list. Here's the group itself. I'm not shorting this group. It's above the 50. It kind of has like a handle coming in here after a cup. I think this was a one-week wonder or maybe a one-day wonder, which is a problem with perhaps the 2-day force. Precious metals, not surprising on these because gold and silver look the way they do. We'll look at silver wheat and then AU, which had been a leader, and then we'll move to something else. Down looks ugly, and AU which looked like it wanted to break out here, is also falling back. All right, so that's top-down investing. I gave you a lot of different choices there. What I also like to do is I like to do a quick bottoms up and show you two or three of my favorite maneuvers. I just go into Woodward and Brown user groups because this is a standard that everybody has. And I like to go into the scorecards, which is right here. Let's go to the ERG 240. And here's 177 stocks, which I can assure you are going to all look pretty darn good if we look at them. We'll go through the top 10 and see if any of these would be potential candidates. So I took all securities, and I'm looking at under Ian and Ron's May 16th groups, classic Woodward scorecard, ERG 240, strong earnings per share, relative strength, and group rate. So let's take a look at 10 and see if these look interesting. Trinity is one of the market leaders. Rails have been leading. It's one of the ones that I've been in and will continue to be long in. Everything is green here. Beautiful lower left, upper right tight. The rails transport the fuels. We've been talking about this stock in this group for months. We've already looked at Micron, so we know this is a good stock. The third one is Delta Airlines, another transport that I own. Lower left, upper right. Mobile breakup from the squeeze on Thursday. This whole group is moving, whether it's UAL, AAL, Alaska, Hawaiian, Spirit. Airlines continue to do well. RF Micro, we've already looked at this one. The Tri-Print Semiconductor Acquirer looks great. Gentherm, we talked about this on Thursday. Lower left, upper right. They make the heated and cooling seats in cars, and they've been doing gangbusters, great earnings per share growth. Trades at a multiple of 31 and growing multiples above that. That's a sign of a good growth company that's going to continue to go up in value. SanDisk, lower left, upper right, getting expensive near $100 with slowing earnings growth. Southwest, here's another airline that I mentioned, airlines, lower left, upper right, looks good. U.S. Silica, the fracking company, big move. Tie them in with the railroads. Fracking does well, railroads do well, and so does U.S. Silica. Greenbrier is just like Trinity. They had earnings come out this past week, I believe, on this day here. So I think that was 10. Let's see. Yep, High Crush is the last one. I think High Crush is in the fracking business as well. Lower left, upper right, with a nice move, but a shooting star-ish looking candle on Friday, at least a topping tail. So that's one way to find some great movers. Another way is to go up into Gallardi land. Look at sprinters. All right, all securities, Gallardi sprinters. Let's just take a look at the top 10. I think you're going to see a theme here that the best stocks come to the top. Here's Trinity, saw that already. Delphi, auto parts. There are a lot of auto parts stocks that look the same. They've had lower left, upper rights. It looks like they want to go again. Flextronics, don't know much about this. They used to be a manufacturer of electronics. They probably still are. OEM manufacturer. Don't know what's going on here. Don't know much about it. It's a cheap stock. Tenneco, here's another auto parts company. So Gentherm, Tenneco. We also saw Magna. Here's Magna, lower left, upper right. What was the other one we saw? Oops, I'm sorry. Delphi. Here's Delta again. Here's High Crush Partners again. Huang Power. No, forget that one. Don't know about the here Southwest. So one thing that I notice when I do this is when I do lists that are the best ofs from the bottoms up, I get a lot of overlap. So maybe the best trick that I can end on today is to say, if the best stocks are on a lot of these scans of the best stocks, and the same stocks are there, that if I had a test that could look at a number of lists of great stocks, that the stocks that make it to the highest number of lists might be the stocks I want to buy. So we're going to end on the group inclusion report. I don't know if you remember, I showed it to you. It was a big performer this week. So here's how I find those stocks. And then let me go show you what I'm talking about. GIF stocks. No pruning. 24 stocks. 92% were up, 3.43%, 1 week return against an S&P of 1.2. Nearly a 3-to-1 return. Here's how I'm going to do it. I'm going to go Tools, Group Inclusion Report. I'm going to call it, I'm going to do a lot today, GIF Top 30. Look for 30 of them. I'm going to put a date because I do this all the time, so 5/22/6.14. And now I'm going to click clear, and I'm going to look at my favorite groups. So I'm going to go into Ghilardi and get his sprinters. I'm going to go into Ian and Woodward and Ron Brown and get the best of less than 15, the demand, ERG, growth, HGS leaders, QEPs, shadow stocks, stocks and groups to the upside, both versions, strong EPS. I'm going to go into my list, and I'm going to try to find pullback to the 50 with the kahuna and the breakout from the squeeze. I'm going to go into Morales and Catcher. I'm going to do Bible gap ups and pocket pivots. Since I'm going to 30 stocks, I'm going to go into my other groups and look at my favorite groups. I'm going to look at what? I'm going to look at HGS 100, Ian Point Score, CanSum Select, IBD 50, IBD 85/85. I'm going to look at stocks flip to positive, PSAR with a mobile breakout from the squeeze. I'm going to look at Tuna Force mobile breakout pocket pivots, daily, weekly, and bongos, top vector vest, Marcus Smith 250. I think I got enough. And then I learned from Ron this past group. I'm going to look at industry. Now I'm going to hit OK. It's going to take a little while. We're going to call it GIF Memorial Day. Let's see what stocks come to the top. That we see Trinity, Gentherm, Delta. Let's see what we got here. All right. First thing is, how many of these have we seen already? Micron, yes. Gentherm, yes. Trinity, yes. AFOP, no. And Coors, no. They were next on the list. Activist, we talk about that all the time. Delta. Here's a communications equipment stock, Iris. Here's Valiant, SanDisk, RF Micro, Airline, Auto Parts. All right, semiconductors. So first thing is we're picking types of stocks that are like the stocks we've already looked at. So let's just go through a few of these, and then I'm going to say goodbye. So I'm going to open up my warehouse view. I'm going to find my top 30s. I'm going to make sure I have a basic scorecard so I don't eliminate any of them. Let's go through these as quickly as I can. Memorial Day special, I'm going to look at all 30. I've already looked at most of them. Trinity, buy, already talked about it. What a great stock. AFOP, I actually own this stock. It's had a nice move after recent earnings. But you could see it had a massive, almost 50% haircut, and now moving back up. Probably time for me to start thinking about taking profits on this. China XD, this is one that Ron's been talking about. What a great mover. I'd have to learn more about upcoming earnings. It's had some great earnings per share when you consider it's a $10 stock. so I need to find out more about this. Gentherm we already talked about. Lam Research, kind of the lower left, upper right. Here's a semiconductor stock. Makes money, good earnings per share growth, trades at a multiple of 15, and it's growing 25 times more. I'd like to see that. That's a nice looking. Chart's a little loose, but I love the fundamental story. Tenneco we already looked at, one of the auto parts. RF Micro we already looked at, one of the technology stocks. Here's another stock that I got into this past week, I think on Thursday. This is Lanet LCI. This is one of the generic companies. I was thinking that I probably got a base here. I liked it breaking above the 50 with a mobile breakout and a squeeze on Thursday. Mostly green above. 3-day green went positive this past week. I like Lanet as a bounce opportunity. Cavium, I don't know this stock from Adam. I believe it's a semiconductor. Kind of loose in here. But I guess it's putting in a cup. Breaking out. Yeah, pretty awesome earnings per share. Delta we already talked about. Southwest we already talked about. One of the specialty chemical stocks, Westlake. So this is has been a mover ever since the market turned around in 08, 09. What a steady performer from 15 up to 75. There's been a couple of splits. Had a long run. Bible gap up here. PSAR reversed. Everything is green. Never seems to correlate well with earnings per share growth, by the way. Bit Auto. This is a high-flying Chinese internet site. Kind of looks like it wants to run again. It's put in its little cup, mostly green. Micron we've already looked at. Michael Kors. Michael Kors is, after a Bible gap up here, it's gone nowhere. It's sideline basis for 4 months. I think it's breaking out again. It had a kahuna on Friday, mobile breakup from the squeeze. Everything turned green. Probably my favorite of the retailers. I think this one has room to run. Magnum, we looked at auto parts. Valiant, we looked at our specialty pharma. Every once in a while, I see Penske, Group 1, and Lithia Motors, some of the roll-up auto dealers, making their way. There's lots of auto parts being made, and there's probably lots of new cars being made. And if there's lots of new cars being made, someone's got to sell them. And Lithia is one of the roll-up dealers. SanDisk, we looked at. NXP, we looked at. Alaska, I mentioned another airline. They all look the same. They all look on fire. Avgo, we looked at. Activist, it's one of my other favorite stocks. This is the old Watson Pharmaceutical. It's holding above its 50. Great earnings per share growth. I believe they're the ones that are acquiring Forest Lab. This has been a leader for some time, and I think it's not a bad place to jump back in after the pullback. Here's your hyperbolic or parabolic run. And this is what you almost expect to see this in the major indices before they have their big correction as well. Aris Group, looked at this, didn't look at this one. This was a communications equipment company, I believe, and pulled back, had a Bible gap up here, bounced off the 50 and running, looks good, everything is green. ETE, this was a favorite from last week. This is a big dividend payer, 2.8%, not as big anymore. Midstream oil and gas, which were big movers within the last couple of weeks, lower left, upper right. United Rentals, one of my holdings, lower left, upper right, talked about this a lot. Everything is green. They rent heavy equipment. If builders are working, then I expect United Rentals to do well. Builders, miners, Avis Car Group has been doing better than Hertz. We're getting near the bottom of the top 30. Alexion we looked at. EOG Resources going sideways. Continental going sideways. That's into the top 30. That is one of my favorite tricks, the group inclusion report. I mentioned home builders. Let's take a look at them real quick. I remember what the home builders are. Now let's just look at this. All right. So let's look at TOL. Well, this is what got me interested about home builders. Certainly a deep pullback. We got great support here at this confluence of the 200 and other moving averages. We got a squeeze. We had a mobile breakout from the squeeze on Thursday. Pocket pivot on Friday, breaking above the 50. There's no moving averages above. That's blue sky. You know, is this an opportunity? Look at Lennar. Even better. Multiple kahunas breaking out, everything green, mobile breakout from the squeeze. Look at Pulte. Look at DHR. Look, DHI, I'm sorry, DH1 here. They all look the same. I see that, and I get interested. I just want to leave you with this caveat, and I'm going to go and look at some seasonality real quickly. Now, seasonality isn't perfect. So what I wanted to find was this one. XHB. Why was I thinking that? So here's home builders. Looks like all those builders. Based off of the 50, or the 200 rather, the 200 has been a good place to buy in the past. So two kahunas, mobile breakout from the squeeze, mostly green. Lot to like here. So I'm very tempted, I have to tell you, to go against seasonality and start nibbling. Usually I get burned when I do that. So if I buy home builders, I'm buying a minor position. What I have here is Magenta Trader, and I'm looking at a seasonality chart of the XHB. And the candlesticks are the price going back 6 months. The yellow line is the predicted seasonality going back over the last 10 years. Here's the predicted seasonality over the next couple of months. And the predicted seasonality tells me, let me just do something here. Let's make this a little bit easier to look at. Here's my channel. I mean, this really fits the channel that the home builders have been in going back for the last couple of months. It almost follows exactly what the seasonality says it should be. Right now, the XHB closed above its range. Now, potentially, we're breaking out, and this channel here will no longer be valid because we're breaking out and go to new highs. But what I know from May 29th to June 11th, so about a 2-week period of time, on the XHB, in the last 8 years, it's been down 7 times, up 1. The average down has been 7.6, or the average return to the shorts has been 7.6. And the 1 year went against the shorts, it was up 0.8%. This is a bad seasonality time, in my mind, to be buying a home builder. I can look at Toll Brothers. Make my little, right, going sideways in the channel, breaking above the channel, and seasonality says 8 out of 10 years down, average return on a short 6.4. The 2 years it went against you, the average was 0.6%. I can look at Pulte. Seasonality is against Pulte as well. So when I looked originally, I thought that the home builders looked interesting. I have to admit, I'm a little bit nervous. So let me do a couple parting pieces of information. First is, this is where I live. This is my condo where my arrowhead is. Imagine waking up every morning, eating breakfast, looking at the ocean, and my desk is in the back half of the condo, and I'm looking out over the intercoastal, which at night is very pretty because of the lights, and it's kind of dark on the ocean. Those that are coming to my meeting, I believe, you could be correct. This is the Marriott, where my arrowhead is right here. So you can see it's just a couple of condos down. Beautiful beach. We're going to have a great time. Second thing is, I am feeling bullish, but I have to put lots of asterisks. Seasonality overall, sell in May and go away, is against me. This may have been a one-week wonder. And, you know, I hate being a permabull, so I have to be a little bit careful. Third thing is, everybody have a safe holiday. And remember, cash is a position. Trade the market you have, not the one that Jeffrey thinks you should have. You can tell by how much I live in HGSI what I think is the best program out there. And I just, I just go back and I look at the major indices. S&P 500, worst case going sideways in a range. Best case is it's breaking out of that range. And there's a daily, let's go to the weekly where I drew the lines. We're breaking out of that range. So if I was a betting person, as we continue to run up, but I'm not totally without fear or without some risk protection. Have a great week, everybody. Remember, next week I probably will not be doing this because I'll be at ASCO, so I'll see you in 2 weeks. Good night or good day.